Hello and welcome to the Federal. In an unscheduled announcement today, the RBI governor has announced a 40 basis point hike in the repo rate. I have with me Economist V Gopalakrishnan to discuss more on this. Thank you for joining us, sir. So,
Thank
to
you.
begin with, now that the RBI has hiked the interest rates by 40 basis points, what will be the immediate fallout of this?
The immediate fallout will be the rise in interest rates in the economic system. Any scenario where an interest rate is hiked, it will be a mixed bag for the common man and the public. On the one side, interest rate hike will give a cheer for people who want to put their money into fixed deposits, where the interest rates will be higher than what it was earlier. So, in the current scenario, post the interest rate hike comes into picture. People who want to park their money into fixed deposits in banks or any other company, they will get an enhanced returns because of the interest rate hike. On the flip side, common man or public who go for borrowing house loans or any other kind of loans will have to shell out more by way of interest rates because of the hike. So it'll be a mixed bag for both, for the common public, that interest rate hike will give them enhanced returns in investment choices. On the other hand, it'll pinch their pockets when they go for loans post interest rate hike. The interest rate hike is done in the present circumstances to bring the inflation, the spiraling inflation under control. As we all know, in the last few months, particularly the Russian-Ukraine crisis, energy prices have skyrocketed. Energy-related products, whether it is LPG or petrol or diesel, every other energy product has gone up substantially, which will have an upward pressure on the inflation in the system, which means more prices we pay for energy products. The cascading impact will be felt by the man in the. It will have a last mile connectivity in terms of higher prices we pay for goods and services. And whenever the economy is heating up, like what we currently see, interest rate hike acts as a coolant for an engine. Whenever the economy is heating up, RBI deploys this tool called interest rate repo rate hike to cool down the economy and bring the inflation under control. And that is a time-tested tool which has been employed by central banks around the world. Even otherwise, across the globe, including the US, governments are facing inflationary pressure. In fact, US is at a high inflation not seen in the last 40 years. So Federal Reserve is taking a call on interest rate hike. And the interest rate hike is a global scenario at the moment, largely because of the reasons contributed by the geopolitics.
Okay. So, sir, because of the existing high retail inflation, customer sentiments are already very low. So, what happens now when home loans and bank loans are going to be costlier?
Yeah, obviously, post interest rate hike, which has come in effect of about 40 basis points, as announced by RBI, the loans are going to get costlier from now on. To what extent is we have to wait and watch for the next couple of days. Once the banks, it depends on how the banks roll out the interest rate hike in the coming days. This will be interesting given the fact that pandemic has restricted the loan market to a large extent. If you look at 2020 and 2021, because of the pandemic and other uncertainties hovering around their personal lives, people desisted from getting into loans in a big way. People were in fact struggling to repay the existing home loans or any other loans. So people did not favor fresh loans when the uncertainty was looming large in the economy over the last 12-18 months. It's only last 6 months, 6 to 9 months time, that people have got the confidence back that the pandemic is behind them and they could start spending more money by way of loans, by buying new cars or buying new homes and other things. So before which the interest rate hike has come. So that will have a big impact on their decision making. But by and large, one-time interest rate hike of 40 bips will not have a major impact on a long-term loan borrowing, but a sustained interest rate hike in the coming months or quarters, if any. I don't predict a series of rate hike from now on, but if there is going to be a scenario where inflation is going to go a little higher and interest rates, further interest rate hikes are required, then the loans will get more and more costlier in the coming weeks or coming months. So as it is, the interest rate hike today will have a bearing on the loan segment. And naturally, we saw in the stock markets, most of the financials, including banks, have got a major hit in terms of stock prices, because interest rate hike will have an adverse impact on their loan books.
Okay, sir. Sir, and LIC launched its IPO today, and this was a very much anticipated IPO launch. So, will the RBI's rate hike now impact this IPO launch, and how much will the impact be?
Rate hike will definitely impact the stock markets in a sense that whenever the interest rates are hiked, the rationale is corporates will curb their loan spending. They will borrow lesser and lesser because they will have to shell out more interest rate in the current regime. So when the loans become lesser, they won't borrow as much as they wish to borrow, because to expand their business operations. So that is not a conducive scenario for the corporate sector as well as the stock market. So whenever there is an interest rate hike, the adverse impact will always be felt, like what we saw today. The stock markets have tanked, have crashed in a major way after the announcement of the interest rate hike. Having said that, LIC is a much awaited IPO for a long time. In fact, it was supposed to be launched a couple of months back. By then, the Russian-Ukraine crisis had a big impact on the stock markets, and that was eventually postponed to the current scenario. On the size as such, LIC is a very, very interesting story, because it's one of the largest PSU insurers, PSU companies, which is hitting the stock markets. The expectations are very high, of course, in the longer term. So in the short term, there will be an impact, because the stock markets will be impacted by rate hike. That will have an adverse effect on the stock markets. But as it is, LIC should sail through. The IPO should sail through at the current stage, at the current price fixed by the government, because there is a huge interest for buying LIC, given the fact that LIC has got a long history of a successful operation. Plus, it has got a very long future in terms of business operations. And LIC will be a poster boy for that growth story. And insurance is a long-term story for Indian market as such, not only in stock markets, even in general. The sector is very promising. So LIC will definitely be grabbed by the investors. But of course, immediately after the listing, depending on the market conditions, there can be some corrections in the price post-listing, but that will be generally ignored by the investors, because they do know once the markets become volatile, price corrections do happen. But as it is, LIC may not face a major impact because of the current decision of repo rate hike.
Okay, sir. So, sir, like you mentioned, the stock markets have taken a plunge today after this announcement was made. So, how bad do you think the crash is?
This is basically a knee-jerk reaction immediately coming after the RBI announcement of a repo rate hike. As I mentioned to you earlier, any rate hike will not be cheered by the markets, because it adversely affects the corporate balance sheet and the financials. In a sense that if from the newer regime of rate hiked regime, the corporates will have to shell out more money by way of interest rate for borrowings. If a corporate has to expand its business or put up a new factory or borrow for their own business operations, they have to shell out more by way of interest cost, and that will have an impact on the balance sheets in the coming quarters. So that is not a good news for the stock markets, as well as overall the health of the financials of the companies. So that is the reason why we are seeing a knee-jerk reaction in the stock markets. Even otherwise, interest rate hike will have an adverse impact on the economic growth fundamentals, because whenever there is an interest rate hike, the overall tendency to grow, driven by the industries and corporates, will come down, adding more pressure to the GDP growth. Whenever there is an inflationary pressure building up in the economy, like what we are seeing in the current scenario, interest rate will be hiked as a tool, and that will cool down the economic fundamentals at the cost of the economic growth in the coming quarters. So having said that, the market crash, the stock market crash post the RBI announcement, should be seen as a knee-jerk reaction. I think markets will take it in its stride and possibly move forward. But even on an overall basis, the geopolitical issues like Russia, Ukraine will continue to have a bearing on the stock market. So RBI interest rate will be one of the several factors which will have a negative or adverse impact on the stock markets. So in the near term, at least next 3 to 6 months, we'll continue to see stock markets behaving in a very volatile manner. RBI interest rate hike will be one of the factors which will add, more volatility to the stock markets.
Okay. So, sir, some experts are saying that the RBI should have done this rate hike way back in April at least, so that there wouldn't have been as much as the shock as we are witnessing now. So, what do you have to say about this? Do you think the RBI has delayed its decision on rate hikes?
I believe the wisdom of RBI because they are data driven. They have entire data in their hands. So they don't look at only India. They look at the global. Basically, central bank interventions are globally coordinated. So it won't be like India will be like an island, or it will not be left out in the global interest rate cycle. So there will be a coordination between the global central banks on handling the interest rate topic. So I do believe RBI has its wisdom that it has got data to increase the interest rate today. But between April and May, we are just in the beginning of May, and April was just probably a few weeks back. So I don't think anything dramatic happened in April or end of March to warrant an interest rate hike at that point in time, because RBI wanted to wait and watch till some clarity emerges. More importantly, the rising fuel prices, energy products like LPG, commercial cylinders, and fuel prices started adding more pressure to the inflation. A couple of months back, we had pressure on the vegetable prices going up substantially, but those items have come down substantially. But now the sustained increase in the fuel prices, particularly the energy products like LPG, the commercial cylinders, will have an adverse impact. And just to tame, any further inflationary pressure in the system, RBI has acted today. I think they are well within their limits to have an assessment based on the data which they have, and it's a council which decides, and the council has decided unanimously to go for a rate hike today with an extent of 40 basis points.
Thank you so much for sharing your insights with us, sir. For more such interesting updates and insights, log on to thefederal.com.